After falling 29% during February and into early March, we started to see a bit of recovery for Cardano's ADA. We've seen in March so far 30% bump to the upside. But is this now coming to an end? And are we actually looking for this move to continue taking us down slightly deeper? In this video, we're going to be jumping down into the world of Cardano, specifically taking a look at the price action of ADA on the daily time frame. We'll be kind of giving our thoughts and opinions on what is going on here and where we think the next few weeks are going to take the price action of ADA. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Tapping the bell, selecting all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out, guys. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into this one. There's quite a few things to kind of talk about. So what I think we'll do is we'll start with this chart, which is basically our Elliott Wave theory chart. This is a good place to start because we do have some substructures here that I find quite interesting. There's a couple of different ways that this could be playing out. I'm going to give you my kind of 2 cents on where I think it's going. But of course, there's a couple of other ways that it could go as well. So let's go ahead and take a look at this, right? So as we can see here, we have this potential that we're in this kind of move taking us down slightly deeper. Okay, this comes in at between 19.64 and 22.89. Okay, now if I zoom out of this a fraction, we're just trying to take a look at the structure. We can see that this would be a C wave movement on the upper end of that at around 22.23. We can see that there's a sub count going on inside here. Took us down into our initial lows, okay, and it's possible that that is done right where we were in those existing lows, right? It's possible that the bottom is kind of complete here. On the flip of that, though, we can also look at this thing as a big corrective structure that has yet to finish, taking us down in towards that 19-cent range, okay? So like I said, there's a couple of different ways it can go, and until we get confirmation, it's going to be really hard to know exactly what's going on. Really, what we want to do is we want to see price push up higher than 44 cent. That will confirm that we're out of that mini structure, and the second that price hits 68.9 or more, then we're going to be outside of that bigger structure there as well, and we can kind of be more confident that the bottom is completely in under these current structures. It's possible that there's something else happens much further down the line that could be more bearish, but for now that would kind of put an end to those bearish counts that we have for Elliott Wave theory. Now let's talk about the concerns. The concerns are right down here. We can see that we had a 5-wave drop. Now that 5-wave drop has to be in one of two places, right? Or 3, I guess, if we really want to kind of look at it. We kind of have a 3-wave structure like this, right? And the 5-wave count either is going to be at the beginning or it's going to be at the end, okay? Out of your 3-wave count. And so it's one of those two positions. The other way that this could be is in a 5-wave position, and it could be at the beginning or at the end, right? And we know it's not an end 5-wave count because it wouldn't make sense for it to be there. So it'd have to be the beginning. That basically means that that 5-wave count that we can see has to be in one of 3 positions, right? It's either going to be an A wave, or it's going to be a C wave, or it's going to be in a wave 1 position, right? That's going to be the 2 places it can go. Now, we can get a little bit more complicated with this when we start thinking about flat corrections, because flat corrections, there's a couple of different ways that you might see a 5-wave count. For example, you might see us with a running flat, for example, which would look like this, and that C wave would be a 5-wave count, okay? It could also be in an irregular flat correction where that C wave is a 5-wave count, right? So we have to understand that there's lots of different places it can be. It's either A, C, or wave 1. Those are the 3 things that we can kind of see where this is going to be. And then, of course, we have to narrow down the type of count that is in. Now, so here we would see this as potential irregular right in there. Okay, we can see it as a potential irregular, and it's complete, and we can go to the moon from here. I don't think that's necessarily the case because we have had a 3-wave corrective structure going up. So we can also look at this as maybe a wave A, B, and we've got to have that C wave come down, right? So therefore it's the beginning structure. So there's a couple of different ways that can go. I think we are probably in a corrective structure down, zigzag. So A up here in B, and then we come down in C. Okay, and that's a positive because we are not likely to breach this low. This low being down here at 23.92 under this structure, unless it goes impulsive and we actually get a 5-wave count, which would mean that we're in that wave 1, right? 1, 2, and then come all the way down here, 3, 4, and 5. And it's possible that something like Black Swan event happens that does this, right? We don't know what they are necessarily be, but you can kind of see where that could possibly put us, right? Much deeper in terms of the price chart. So knowing that that particular 5-wave count means our analysis is kind of skewed by the different kind of possibilities. We're going to have to kind of work our way through the different kind of options as time goes past, right? So we know that 44 cent would create an invalidation for kind of the bigger structures, but we could also go down a little bit deeper here and say that if the price action were to come down lower than higher than 42.13, and if we were to push that level, then we know that this is no longer a consideration for further downside onto that 5-wave count, and it would have to be considered as our irregular flat correction just coming in here as an ABC structure. So it would look like an A, B, and C structure like that, where we'd know that and we'd be able to kind of deal with it. It means that we could then start to actually analyze what's going on this side. So until that happens, we are finding ourselves in a bit of a vulnerable position, right? Because we're going to rely on trying to make sure that we have our kind of odds stacked in our favor, right? So for now, we can see that we have this potential. So the next obvious move until we kind of breach those highs is that the expectation has to be down. We have to be moving into another 5-wave count to the downside, right? That's going to be the obvious expectation. So we should run with that. Not only have we got the momentum to support the idea of that, but it's also the only one that's currently actively valid, and would only really get confirmation that this is a possibility when we breach the lower 29.76. Failure to do so, we could also argue that we are in this upward directional move, okay? Now, so I know there's going to be people in the comments section just saying it could go up, it could go down, it could go sideways. And you're right, you know, to a point, that is exactly what I'm saying here. But you have to consider that actually really what's going on is that we are in a sideways trading, ranging market, right? This ranging market, what we're really waiting for here is confirmation of the direction. And until you get that, you are kind of gambling. You're either saying it's going to go up or you're going to gamble and say it's going to go down, right? A ranging market is very, very difficult, specifically on a daily time frame like this. Like the smaller time frame stuff, you could probably be a little bit more descriptive over where the directions are and all that kind of stuff. We know that the next move is going to be down over the next couple of days or so. At least looking at it, that's where I would say the obvious solution is going to be that we have to move down here. And if that is the case, then, you know, we're going to be heading down towards 29.76. Breaching 29.76 under a correct structure, so as in we have some kind of little wave 1, we bounce up and then we go down into a wave 3 here, 4 and then 5. That's where we get that, or really where we get that confirmation that we're in that zigzag pattern, right? So we don't know for certain. One of the things that we do know, though, is that if we have a 5-wave count coming down here, there's going to be a fantastic long opportunity. Okay, so we're going to be looking at dollar cost averaging if this does play out like this, okay, because it makes the most amount of sense to be doing that down here, because we would have ourselves the ability to look at this as a giant corrective move coming up higher, okay, and that would be fantastic to kind of ride, and that should breach then the 44 cents and so forth. So although I am saying it could go up, it could go down, that's because we're in this ranging market. I think the highest probability move is that we go down, and therefore we should run, in my opinion, with that. Of course, it is just my opinion. I'm not a financial advisor. I can't give you financial advice or anything like that. But my expectations are on this daily chart that we have to have this grind to the downside. It will be something that will probably take some time to play out. But if I were to short the market, I'd be shorting it around here, and I'll make sure that I put my stop loss above our wave 1 origin, so above the 42.13, and then I'll be looking to kind of push our take profit significantly lower. Okay, now this would not give us a good risk reward ratio. Looking at it, I think we'd have to kind of wait for a better entry position on this one before we would be able to take it. I would personally be looking for anything above 1.5, but the closer that we can get to 3.0, the better. So if we were to kind of push back up into the resistances at around 37 cent, then we could potentially get a good risk reward ratio above 2.25 and take that down a little bit deeper. I think our expectations on the downside, based on the existing data as it stands at the moment, would put us approximately just down here. Let me actually get rid of this one for a second. Yeah, it would put us right in this little zone between 27.32 on the high side and 25.17 on the low side. So our risk reward ratio would obviously have to reflect those changes as well. You can see that would be on the higher expectation there. On the lower expectation, it would be about 1.8. So you'd have to kind of wait to come back up into these resistances, which I would say is approximately around here at 37.2. 5. Okay, that would be a nice kind of place to kind of think about entry. I think that would give us the kind of the maximum kind of level of getting comfortable in a short position. So if I were to short ADA, that's kind of what I would be looking for, and I'd have that target range somewhere in the kind of 25.15 to 27.32. And you can see that that's above this key area down here at 23.92, meaning that we could potentially look at this also as that kind of bigger corrective structure to the upside, breaching that 44 cent range. So it does look like dollar cost averaging averaging down here. Like I said, if we can drop down lower than 30 cent, that's dollar cost averaging territory in my humble opinion. Now, when we take a look at it from a smart money concepts point of view, you can see that we're trying to fight and stay above the 50 EMA on the daily, but we are below and got rejected from the 200 EMA. So below equilibrium, finding support briefly down here. I don't think this is going to hold out if I'm being brutally honest with you, but this is a daily time frame, so do expect some volatility on the smaller time frame stuff. And as we kind of look at this, I think it's most logically, or the most logical kind of explanation, I think, is that we do come down here, and we can see that these key areas that I've already picked out happen to fall quite nicely in with the territory that I'm looking at. These are institutional candles that were not picked up by 𝗕𝗓𝗪𝗀𝗪's smart money concepts. You can see the one here that almost got filled out recently, but these are the two key ones that I think are likely to occur right down in that discounted area. We have a weak low and a strong high, so unlikely that we're going to push up into that strong high anytime soon, and we have got a weak low, so we could come down quite a bit if we do end up with that impulsive trigger point taking us significantly lower here on ADA, although I think actually it's probably just going to be corrective. We'll know more as the kind of weeks kind of tick on by. Now, as we come up into here, this is one of the things I wanted to kind of talk about a little bit. And this is kind of just going back to some of these other kind of patterns that you see a lot of other people kind of talk about. These are relatively simple to understand things. These are not complicated. And this one is an ascending wedge. And an ascending wedge essentially is basically you draw a trend line on your low ends. I'm use wicks. I only use wicks because price went there, and we should respect the fact that the price went to those lows. So we joined those wicks together, and we end up with this kind of trend line taking us up higher. A lot of people will speculate that we're just going to bounce from this and we're just going to go to the moon and so forth, right? Unfortunately, when it comes to ascending wedges like this, these are deemed bearish, and you actually break down from these. So what you tend to find is you have this kind of coiling up, okay, and then essentially you end up with this big break to the downside from here. This actually is kind of anchored in at 44 cent, and as I have drawn it, but you can draw this in many different ways, and again, you don't have to have it as an ascending wedge. In fact, you can kind of make this wherever you want it to be. So if you want to be super bullish on the market, you could basically go ahead and draw something like this and be like, look, this is great. We're going up into this kind of triangle. We're going to break upwards. It's going to be to the moon, right? And all that kind of stuff. Of course, it already does depend on where you want to draw your trend lines, because you could just go back a little bit further and draw it over here. Let's draw that back in. You can see that's really hitting resistance on that higher side, right? And then again, we could look at that as a negative, because if I were to also draw a trend line on this side, then we can actually look at it like a channel taking us down deeper, and that wouldn't be necessarily good, and we're hitting the upper resistances, right? So it's all about perspective on where you draw your trend lines and how deeply you're zoomed in on your analysis, right? This is why I don't tend to do this kind of stuff very often, because I just think it's a very, very weak way of addressing the market. But if I were to look at it just from this lens here, there is still that potential push up higher under a bullish market, but I think this is going to break down, if I'm being brutally honest with you. One of the things that we often talk about quite a bit on the channel is how we have higher highs and higher lows have a tendency to break down, and lower lows and lower highs have a tendency to break to the upside. So I'm not expecting us to break upwards just yet, but we are in a territory here where we can argue that we are in fact coming down into lower lows, and we are coming down into lower highs. And as I said, this kind of pattern would have a break upwards, but I think this has to happen much further down the line, because if I draw this out here, we can argue that we'd have that zigzag pattern play out, taking us down into that 27 cent, 25 cent range, right? And then we get that break upwards here, okay, back up into our ascending wedge. And of course, our wedge pattern would change because we'd adjust that line, right? You can see how subjective this is, but you can kind of see that actually, you know, depending on what lens you want to look through, you can make these lines, these trend lines do whatever you want, and you can kind of make them kind of bullish or bearish depending on how you feel personally. I think, though, ultimately we end up in a situation where we're in both bullish and bearish territory, and that doesn't really help. I do think the next move happens to be down, and then once we complete that move to the downside, I think we then have a move to the upside. Nothing moves in straight lines after all. We have to kind of bear all that in mind. So looking at it, I'd say, yeah, if I'm going to short the market, I'm going to look at that somewhere around that kind of entry I was talking about. I think it's a zigzag pattern down, not an irregular flat. And I do think that once we complete this low, we have a bigger move to the upside where probably we'll be able to breach up into the 50-cent ranges. But let me know what your thoughts are on or in the comments down below. If you found this useful, informative, smash the like button. If you're new to the channel, subscribe. And don't forget to join us down in Discord. Guys, until the next one, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos